Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because months ago we said Bitcoin would likely dip below 90K and it was possible we'd even see Bitcoin back below 80K. And now that we have finally revisited this price region, I do believe this is where Bitcoin will bottom. And for those of you that are new to the channel, this is not our first time doing this. In June of 2024, we said Bitcoin would likely go below 60K and it was possible we'd even see Bitcoin in the low 50,000s. And just a few months later, that is exactly what ended up playing out. And we said that we were going to miss this Bitcoin chart because it served us so well in 2024, but that we were looking forward to making a new one for 2025. And now that we find ourselves here in this green region once again, I can't help but notice that sentiment is exactly how it was during the Japanese yen carry trade implosion in August of 2024 when Bitcoin bottomed. So let's talk about why I do think Bitcoin will bottom in this region. For one, Bitcoin tends to go lower than most bulls expect, but it doesn't go as low as most bears expect it to. In 2024, the bulls were saying we would never go below 60K again, but of course that ended up playing out, but the bears were calling for a retest of 40K, and that ended up never happening. And we saw the same thing in early 2023. Many investors were waiting for a double bottom, never happened. In the summer of 2023, many investors wanted to buy a retest of 20K, never happened. In late 2023, many investors wanted to buy a retest of 30K, never happened. And in 2024, so many investors, and I was getting so many comments talking about buying a retest of 40K, but that never happened. And here we are once again today. I'm seeing so many people calling for 60 to 70K Bitcoin, but I don't think we go that low, especially because Bitcoin already spent 9 months consolidating in that region. So if we were to retest those levels, that would actually be a very concerning sign that the cycle is perhaps over and all we're going to get is a lower high bounce before Bitcoin spends months and months and months consolidating. So if you're calling for Bitcoin to revisit the 60,000s here, just be careful what you wish for because Bitcoin has never gone below its 50-week moving average in a bull market. You can go back and look at 2021. You can go back on your own and look at 2017 or 2013. When we lose the 50-week, that's actually usually a sign that the cycle is over and that the cycle top is in. Let's talk about more confluence with this price area. We've been talking about the CME gap that we left for a very long time now, and this frustrates a lot of people and they think it's a meme that doesn't matter. But we have seen Bitcoin fill these gaps over and over again. In early 2023, aggressive 3-week rally, come back, don't fill the gap, take out the high, fill the gap, and then rally. Same thing in late 2023, 3-week rally, come down, don't fill the gap, take out the high, come down and fill the gap and then rally. And then here we are once again today, very aggressive 3-week rally, come down and see a pullback, but we don't fill the gap, go up and take the high, come down and fill the gap and then rally if history were to repeat. And this makes a lot of sense sentiment wise. We just keep wrecking leverage traders left and right. We get a ton of longs to pile in up here, liquidate them, get a ton of shorts to pile in, wreck all of the shorts, get the longs to FOMO back in once again, and then wreck all the longs again. So leverage traders and people who were trading meme coins got absolutely wrecked during this range, during this range, and during this range, when in reality, we're just consolidating and then coming down and filling the CME gap, which shouldn't be too much of a concern for spot holders. Now, the tricky thing here is, does Bitcoin actually have to come down and truly fill the gap early in March before it can finally consolidate and rally higher? That's what we saw the last 2 times, but it got so close that I don't think we have to go lower, but it wouldn't surprise me if we had one last shakeout to fully fill that gap and really get people to panic early in March before we finally reverse. Unfortunately, this isn't an exact science. I do think that was close enough, but if we still go down and fill it fully, that wouldn't surprise me either. I just don't want to see us go below 70K if we're going to keep this cycle intact. One last dip lower could also correspond to a retest to the 50-week moving average like we saw in August of 2024, but the 50-week did get front run in Q3 of 2023. So either scenario is fine by me. I just don't want us closing below that pivotal moving average and back into our previous trading range. So what is the bottom confirmation we should be on the lookout for? There's really two different variations. This price action reminds me a ton of what we saw in early 2021. You had two false breakouts and then a range break. Here we are once again with two false breakouts and then a range break. What I would like to see is some consolidation and maybe even come down and take out that low, and that maybe corresponds with fully filling the CME gap, and that would be incredibly painful both time-wise and price-wise for many investors. But that would be one confirmation of the bottom, taking out this low one last time and then reclaiming it. The other confirmation would be a clean reclaim of our previous trading range. That would cause a ton of traders to FOMO back into the market and likely leads to new all-time highs in my opinion. But as of right now, we are in the middle of no man's land. Do I think we bottom in this area? Yes, but how long it takes or how much chop needs to happen before that finally occurs, we won't really know until we see the reclaim of that low or we reclaim our previous trading range. But looking at on-chain indicators, this does truly feel like a local bottom. We're seeing the most short-term holder capitulation we've seen since the August 5th bottom when we had the Japanese yen carry trade implosion. The time before that was when 3AC went under and we saw a capitulation local bottom there. And the time before that, what do you know, was early 2021. That price action we said was similar to what we're seeing today when you have everybody panic selling a range break, alts getting decimated, and then Bitcoin consolidating for its next move higher. So I like to buy when short-term holders are panicking. It is unfortunate that these people likely bought higher and now are selling the lows, but it is very hard to manage emotions in this market, especially if you're a new entrant that was promised all of these insanely high price targets when Saylor was buying Bitcoin and people were talking about the US market buying Bitcoin for a strategic reserve. You also see that short-term holder capitulation very clearly in the sentiment during extreme greed. They were all piling in. Now that we're in extreme fear, they are all capitulating the bottom. Similar to what we saw in 2024, in March, they were all piling in and they all capitulated at the bottom in August. And what do you know? That capitulation happens when there's a lot of fear, and the FOMOing in happens when there's a lot of greed. And it looks like we're just seeing that cycle repeat once again. We're also seeing a bit of capitulation in the ETFs with the largest ever daily outflow. Those large daily outflows historically have marked local bottoms because a lot of retail investors do hold these ETFs. So if they piled in after Trump won the election, or if they piled in when Bitcoin was above 100K, I wouldn't be surprised if a lot of them are selling the ETF in their brokerage because of all the fear and uncertainty in the market right now. But usually that's more of a local bottom sign and not the sign that things are going to start getting worse from here. And this is exactly why we have to try and be greedy when others are fearful, because sentiment can change very, very quickly. We just saw an announcement that Trump is going to host the first White House crypto summit on March 7th. Is something incredibly magnificent going to come out of this? Who knows? But if something does, you can believe that sentiment will flip immediately. Same thing with what we're seeing from BlackRock, the largest asset manager in the world. They're adding their Bitcoin ETF to their model portfolio, and I wouldn't be surprised if we see more and more financial advisors recommending a small 2, 3, 4, 5% Bitcoin allocation to their clients, especially with all the currency debasement we're expecting over the next few years. And all it takes is one bullish headline, one surprise catalyst, and the market sentiment will flip on a dime. And speaking of flipping on a dime, we have a very nice uptrend on global liquidity recently. When it was dropping, we were taking profits at the highs because we knew that it would get priced into asset markets eventually. But now that global liquidity is rising while Bitcoin is going down, many investors are ignoring it and could care less about what it says because they're just scared that Bitcoin is going to go lower. But if we do continue to see this rise in global liquidity, I would expect Bitcoin to put in new highs, and I would expect for this bull market to continue. If we want to see that happen, we really want to see the dollar index roll over here. We want this to just be a short squeeze like what we saw in January before it continues its downtrend. We are so close to breaking out of the risk off region, and I really think risk assets will like that if we see the dollar index go low enough. We are seeing the market starting to price in more rate cuts. This is something we knew was coming because one rate cut just wasn't realistic for the entirety of 2025. And I would expect to see more and more priced in, which is going to put downward pressure on the US dollar index, especially because of this very concerning Atlanta Fed GDP Now real GDP estimate that we saw for Q1 of 2025, which essentially is saying that we're entering recession. Now, this is a very, very volatile data point. Sometimes it spikes up aggressively and then goes back down. Maybe now it's dropping aggressively and then it's going to recover. So I don't think this should raise any huge alarm bells quite yet, but this is definitely something the Fed will be paying attention to. And it's probably why we're seeing more of these rate cuts priced in. But this is a very concerning sign for what we can expect in the next maybe 6 to 9 months if we do start seeing growth slow down and we do start seeing these lower and lower GDP readings. But in the short term, the market is using this as an excuse to price in more rate cuts, which is actually bullish for risk assets because it will send the dollar index lower, which should send global liquidity higher. So we'll see what happens. My base case remains unchanged. I still think we will see a cycle top in the first half of 2025, but that would require a swift recovery from Bitcoin. If we end up seeing a prolonged consolidation like what we saw in the first half of 2024, I'd be open to a later top, but as of right now, that is not the base case I'm seeing. And if we see Bitcoin closing weekly candles below 70K, we will have to face the facts that perhaps the cycle top is in and all we're going to get is a lower high before macro really worsens and we enter a bear market. But as of right now, I still think we have higher to go as long as we don't lose those pivotal price levels and as long as we see a swift recovery and see some FOMO pile back into this market. The first step for that swift recovery would be a recovery in the S&P 500. Whenever it goes down, it is very hard for Bitcoin to do well because Bitcoin is further out on the risk curve. You can see here the S&P 500 started going down and then Bitcoin just capitulated. So we really want to see the S&P 500 start recovering here. Then it becomes very likely that Bitcoin will follow. But as of right now, we have to wait and see what price action has in store next week. So what am I doing with my portfolio? I haven't made any changes since my last video, but as I mentioned in that video, I did make some purchases on Solana, Ethereum, and Bitcoin earlier this week because I could not believe the prices we were seeing. And right now, I'm very happy with how it is. I have a pretty large cash position to protect me in case the cycle is over, but I also have pretty heavy exposure to Ethereum and Solana because I do expect them to outperform Bitcoin going forward if the cycle isn't over. So we'll see what happens. Very happy with these holdings as of right now, but I will continue to take profits or dollar cost average into the market, depending on whether it feels like we're overextended into extreme greed or the market is a bit too fearful and we're due for some mean reversion at the very least, especially because we finally have Bitcoin back in this fair value region. Everybody was piling in and could not get enough Bitcoin when it was in the expensive region. But now that it's in the fair value region, I'm seeing all these calls for cycle tops. I'm seeing all these calls for 60K Bitcoin. But if this cycle isn't over, I don't think investors get those prices, but nothing is impossible in this market. And I've seen Bitcoin do crazier things. And speaking of crazy things, I don't even know what to call this Ethereum weekly candle. We really don't want to see a close below that previous wick. The only bullish argument that can be made here is maybe this was one final deviation below that previous wick that really makes everybody give up hope. But if we start closing weekly candles below that wick, things will start looking incredibly concerning for Ethereum. The good news is we are seeing a bit of divergence on Ethereum Bitcoin. We saw Bitcoin make a new low, but Ethereum's low wasn't as dramatic as Bitcoin's. So we're actually seeing a higher low on Ethereum Bitcoin. Hopefully this is a sign of reversal. During this cycle so far, that has not been the case. We've just seen small rallies and then seen it roll over. But now that we're at December 2020 lows, if there was ever a time for reversal, it would be now. As for Solana, still feel like we've seen true capitulation on this one. At the very least, you'd expect a mean reversion bounce. And then there you could figure out whether you wanted to sell and protect yourself, or if you're expecting the party to continue versus it just rolling over and going to lower prices. We're really going to have to see what Bitcoin does between now and then to have a better read. But I do like buying this type of capitulation to sell on a bounce if we do end up seeing it, especially because we're seeing a bit of strength come in on Solana versus Bitcoin with this week to the downside. But next week's price action will be pivotal to actually see how that ends up playing out. And we do have some good narratives developing. We did see the CME announce they're going to launch Solana futures, which is the first step towards an ETF. So it's very likely we see a Solana ETF in 2025. And it's nice to see that some of the Memecoin mania is being washed out because it was taking up all of the attention and putting so much downward pressure on Solana's price because these platforms were getting so much Solana off of fees and then just dumping it on the market. So hopefully less meme coin speculation could mean less Solana sell pressure, but we're going to have to wait and see how that develops. As for traditional markets, not the best week for the S&P 500, but we did see a nice bounce on Friday. So hopefully we can see a good start to next week, especially if more rate cuts continue to be priced in. We really want to have a strong S&P 500 for Bitcoin, because whenever the S&P 500 has big sell-offs, Bitcoin just ends up selling off way more. So we really want to see the S&P 500 recover here if this cycle isn't going to be over, but that's something we're going to have to continue to monitor and see what happens. But in the longer term, we're still seeing huge national deficits, and those deficits are getting worse, which means more national debt and more currency debasement, which should be a good buoy for our risk assets like the S&P 500 and like Bitcoin in the longer term. But that journey is likely going to have a lot of volatility along the way. So managing risks and having a portfolio that makes sense for you is the best way to navigate that storm. But as always, let me know what you expect. Will we bottom in this possible region, or are we actually going to go to the 60,000s that everybody is calling for? Or do you just think it's over and this is going to be a bear market that's going to take us back to the 200-week moving average and we're going to go a lot lower? You guys know what my base case is. You guys know what I think is by far the most likely outcome, but of course we'll continue to monitor it and see what happens. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.